In 2026, markets don't move on narratives. They move on liquidity, policy, and incentives. That's why SolanaFloor is launching the big picture. Every week, we step back from the noise, pressure test the headlines, challenge assumptions, and map what macro, regulation, and market structure will mean for crypto and for Solana. No hype, no shilling. Pure signals straight from the experts. This is the big picture. GM, we are live. What's up, everyone? Welcome back to The Big Picture. I'm Jack, and of course, joined by my wonderful co-host, Mr. Thomas Bahamas here. We've got a very exciting one today. It's a conversation that I've personally been looking forward to for quite a while since we organized it. We're going to be sitting down with Thomas Cohen, the head of tokenization at Galaxy Digital. Thomas Bahamas, how are you doing on this rather red Thursday? There's blood on the streets.
GM, everybody. I'm surviving in this market. I hope everyone else is too. I want to thank everybody for showing up today. It's a red market, but we have another great Thomas on the show today. So I'm really excited to talk to him. He's a great guy. We met him at Breakpoint, so looking forward to talking to him.
We did. It's going to be confusing for me. I might refer to you as TB or Mr. Bahamas because two Thomases is going to get very, very confusing. But I'm super excited. And as you mentioned, we did talk to him actually already in December during Breakpoint in Abu Dhabi. He gave us some incredible alpha back then about the $5 trillion giant, absolute behemoth State Street, bringing some tokenized funds on chain through them. But obviously, back in December, things were quite different than they are now. There was this insane optimism in the Solana ecosystem. It's the main event of the year, if you will, right? The entire ecosystem gets together, and now Solana's trading at under $90. So different energy, but the fundamentals seem to be doing solid. So I'm curious to pick his brain on that. On his particular sort of personal journey into crypto, I think it's safe to say one of the most interesting journeys out there that we've come across. You hear some interesting founder journeys into crypto, but Thomas Cohen's journey has been particularly interesting. So we have mechanical engineering at MIT. We have a joint MBA and public policy from Harvard, which is already wild, but then it gets even wilder. He worked at the Boston Fed CBDC team. He helped PayPal's stablecoin at Paxos. He's also worked on other CBDC projects like at Ripple, and now he's running tokenization at Galaxy, and they just led the first tokenization of a NASDAQ-listed company and their SEC-registered shares as well. And that's happening on Solana. Pretty wild resume.
Oh, yeah. It's a fantastic resume. So to have him on the big picture, and really like understand what he's up to, I'm very excited about. And also really want to dig into, the Solana piece, right? So, Galaxy actually put their stock on Solana, right? It's not a wrapper, not synthetic. It's real Class A shares on Solana through Superstate's opening bell platform. So it's huge. What happens when real securities start living on the same chain as your DeFi protocols? Can you use Galaxy tokens as collateral? What are we gonna do with those tokens? So I feel like there's so much there, and this is really, TradFi and DeFi coming together. So I'm very excited to see this.
Definitely. Some sort of big questions there. And I guess the broader question of where tokenization in general goes from here, right? It's early 2026. And I think Thomas has seen it from every angle possible. He's been on the government side. He's done regulated fintech stuff. He's done the CBDC stuff, which I guess most of us don't exactly love. I'm not a huge fan of CBDCs. I know it's gaining traction elsewhere in the world, like in Europe, but it should be a very, very interesting conversation.
Yeah, and I mean, he's got a fascinating background as, one of the parts that I'm most interested in is stable coins. I know I kind of trash stable coins every now and then, but they're front and center on what's going on with is very interesting, right? It's an interesting topic, and I'm curious to see his take on them, right? I know that the EU's been pretty pro CBDCs, while the US has been pretty far against them. But it's like, how much different are CBDCs than having a public blockchain using USDC, right? Those are the type of questions that I'm interested in hearing because you can track everything on chain, right? So it'll be very exciting to dig into that.
Absolutely. Just when you were talking about stablecoins there, it got me thinking when we had our conversation last week with Matt Hogan, his relatively spicy take on why banks were blocking stablecoin yields and the Clarity Act. I think that's maybe an interesting angle to ask him about, right? Does he share this sort of idea that banks are largely Machiavellian and led by Machiavellian individuals that will eventually sort of cave to the profit maximization, and they'll see the opportunity of stable coins and think, you know what, it's a much better offering than what we have right now with these traditional savings accounts, and that they're basically just blocking stablecoin yield and they're blocking the Clarity Act until they can get ahead of the game and sort of control it. I'm curious if Thomas Cohen thinks that is going to be the case as well. But now, before we welcome Mr. Cohen, I think given where we are, both in the cycle and both when we look at the charts, the amount of blood out there on the streets, the sentiment is sort of crashing once again. If you look at the infamous fear and greed index, I think it's probably important that we start with a bit of a market update. Now, TB, $1 billion was liquidated from crypto markets in the last 24 hours alone. Not looking good. We're talking about 217,000 traders impacted, according to SolanaFloor's reporting. In a way, it's good to know that we're not alone in this sort of sea of red, but Sol being under $90 is still a bit heartbreaking to think. Not too long ago, I feel like Sol was at 290 plus, right? I feel like that was just a couple of months ago, and here we are. BTC's at 69,000, ETH is at around 2K. And I think the reason why these price points matter now more than ever before is because for weeks we've been talking to TradFi experts, these billion-dollar asset managers, leading all the way back to December in Abu Dhabi, and they've been arguing the same thing. They've been saying fundamentals are exactly where we want them to be across the entire industry, but price is lagging. Yet, instead of price catching up, what we're seeing is Saylor's strategy is now talking about unrealized gains of $4.8 billion on their Bitcoin holdings. You've got Bitmine and Tom Lee, right? He became a bit of a meme over the last week. Ansem was posting about him being one of the least profitable traders in all of history. So theoretically, Bitmine is now looking at a multi-billion-dollar negative P&L as well. So, I mean, in a sense, it gives me confidence that you and I have we're not alone in this. People have lost much larger amounts, but then they seem to be not selling. So I don't know. What do you feel? Is this the bottom? Is the bottom near? Is price actually going to catch up? How do we feel?
I don't know. I mean, at this point, the price is more than just lagging, right? The price is going down, so it's tough to look at it either way. It's definitely looking pretty dark out there. But I mean, we did talk to Matt Hogan, and I mean, he is very positive long term, right? We're looking at short term moves here, and he's got a $1 trillion market cap target in the next 5 to 10 years. So this is something that's critical infrastructure for their businesses, right? We've got sovereigns, university endowments. Harvard is buying Bitcoin. They're buying gold as well, but they're using it as a store of value. So there is a lot of I don't know. There's a lot of like positive things that are going on that are not reflected in the price right now. And there's on-chain assets. Stables are being used more than ever. RWAs are having like a pretty big surge right now. Silver metals are all coming on chain, and I mean, there's better value proposition than traditional assets in a lot of these crypto assets. And I mean, Matt Hogan also said like how easy of a pitch that Sol is to all of his institutional investors.
He
So
did.
like they're getting it right, they're understanding it.
Yeah, that was something that gave me a lot of optimism, right? Matt Hogan said that they have roughly 15,000 meetings, if you will, with TradFi investors throughout the year. Talking about Bitwise here, I'm sure Matt doesn't have the time to attend all 15,000 of them, but he's basically saying that Sol is a very easy pitch to these traditional investors for the reasons that you just outlined there, and that's extremely bullish to listen to, and hopefully that $1 trillion market cap sort of target is realized sooner rather than later, but. No, you're absolutely right. I think on the one hand, it's great to sort of focus on these uh, reasons why we're all optimistic, reasons why we're dealing with the price action in the short term. But I also feel that somehow by focusing on all of these TradFi bull theses, right, and these lofty price targets that people like Tom Lee have been coming out with, saying, "Oh, ETH is going to be at $9,000 by the end of the year," that the industry sort of maybe overlooked to a certain extent just how intertwined crypto is today in 2026 with some of these macro headwinds that we're experiencing right now. I think people are still used to this idea that crypto does crypto things, but that is no longer the case. So as we were mentioning earlier, one of the annoying things is that metals move up. We see this sort of generational parabolic rally. Gold reaches $5,600 an ounce. Bitcoin's sort of moving sideways, and then metals crash, and Bitcoin nukes even harder. So I think that's sort of the heartbreaking angle for people is that we expect to find clarity in price action, and we look for correlation between these different asset classes that are supposed to be physical and digital forms of stores of value, but it's not making sense as far as we can see on crypto Twitter. So I guess what sort of makes me feel a bit more comfortable is that when we look at the market caps comparatively, metals as a store of value, as a physical store of value, are still orders of magnitude larger than the digital stores of value, right? We're looking at 45 to $50 trillion in market cap of metals, precious metals, that is, not all metals, and cryptos at around $2.5 trillion today. So that's 18 to 20 times smaller crypto is than the entirety of the precious metals market cap. So yeah, this store of value narrative sort of shaken at the moment. People are maybe a little bit sort of falling out of favor with it, but I do suspect that based on most of the conversations that we've had over the last weeks, that this digital store of value narrative, and you mentioned digital assets having a much better value proposition, a much clearer value proposition when it comes to custody and transfers, is going to start to resonate with a larger audience around the world. I hope, fingers crossed.
Yeah, I'm hoping that too. And I mean, you open X or Twitter, look at crypto Twitter, and everybody's got a theory for what's going on and why crypto's lagging and what's going on, right? It's like the tin hats are coming out for what's actually going on. What is going on? We're not really sure, but it's not, crypto is not keeping up right now. But what we are seeing is a lot of people are not, it's a move from fiat currency and they're moving to metals right now, or that's what we saw. So I think that does ultimately translate to crypto, but we'll see. And I mean, that's a lot of like what Matt Hogan was talking about that resonated with me. And I mean, I left that conversation just feeling absolutely euphoric. I was feeling great, and then I think like the next day the prices sunk like 20% on Solana. So it was like it didn't really match up with expectations and how I was feeling, but that's how it is, right? We're kind of here for the volatility, and crypto is very volatile.
A classic case of commentator's curse, I think, right? You make all the right observations, all the right readings of the charts, the fundamentals, so on and so forth, and then as soon as you say it, you've sort of jinxed it and things move in the opposite direction. So shout out to Matt Hogan for joining us on The Big Picture last week. We do, of course, have a star-studded lineup going forward every Thursday at 11 a.m. ET. So for more of these macro takes and geopolitical I guess, understanding and how it sort of plays into crypto and price and market caps, then do join in every Thursday at 11 a.m. ET. Now, TB, I feel before we get into the conversation with Thomas Cohen today, we should probably run through some of the headlines. SolanaFloor headlines have been looking wild. You've got all these macro factors that are playing into it. 1010 comes in. We're talking about over $4 billion of liquidations. Metals are also insanely volatile. And then, of course, in Solana land, we have some great funding news. So what do you think? Should we get into some headlines before Thomas Cohen joins us?
Absolutely. Yeah, we can't go throughout the week without at least bringing up the top of all these topics. So let's go through it.
I know. Let's dive into some of these. All right. I'm going to pull up this article very, very quickly. Our senior journalist, Finn, of course, has been hard at work covering all of these news items. Let me know if you can see my screen, TB.
Yep, I see it.
Excellent. So this is a wild one. $4 billion liquidated from crypto amid macroeconomic meltdown. And commodities, of course, suffer historic levels of volatility as global markets implode. Now, there's a few interesting points that we're going to point out from this article. But to me, what stood out the most is that over the course of 24 hours, the market cap fluctuations in gold and silver far eclipsed the entirety of crypto's market cap, right? So people often say, oh, I'm not going to invest in Bitcoin, or I'm not going to invest in ETH or Solana or crypto in general. I don't really want to sort of expose myself to that level of volatility. Yet some of the safest assets supposedly are are also experiencing insane levels of volatility at the moment. So curious to see how that plays out. But just diving into the article here, some of the key points I think that really stood out for me is that this is not crypto specific, right? As we mentioned, the volatility is cross asset. We're talking about deleveraging all over the place. And it all seems to stem from a combination of partially the US shutdown risks. We saw some uncertainty in the Fed, the leadership changing. There's a lot of tensions in the Middle East, right? The US has had military operations in South America. They've now moved some of their carriers back into the Gulf. So tensions seem to be rising there. However, Finn does make a very, very important distinction in this article here. We're looking at price impact and damage to price short term. That doesn't necessarily mean that we have serious structural damage, right?
Yeah, at least I'm hoping so, right? It's hard to avoid the bad news that keeps popping up, but there's always some light at the end of the tunnel, right?
There is, and I think the big picture angle here is that these are the moments when literally every asset class is crashing. In the grand scheme of things, it's when we find out who's maybe leveraged to the eyeballs and who's actually solvent, right? And that sort of determines who can survive these fluctuations.
100%. Yeah, and I mean the safe assets are not immune to forced selling, right? Gold and silver saw $10 trillion erased. I think silver crashed like 40% in a single day after it pumped. So, we're seeing margin calls, we're seeing risk reduction as a result of these macro conditions. So the reasons why this matters for crypto is that the store of value assets still suffer in liquidity crunches, right? So we're seeing this across all assets right now. And of course, that includes crypto too, right?
Yep, we certainly are. And I think what really rubs salt into the wound here is that we're going to scroll down in the article here. We have, aside from the $10 trillion metal fluctuations and the $4 billion that was liquidated in crypto, corporate insiders sell stocks at the highest levels since 2021, which, as we all know, was a very big moment for retail as well. Now, second story that we need to get into, I think, and this ties in perfectly, is why. Why is all this happening? Why are corporate insiders selling more than they ever have since 2021? Why is the precious metal asset class experiencing $10 trillion of volatility? Why is crypto experiencing all this deleveraging? And I think Cathie Wood captures, I guess, her thesis, her theory, her ideas fairly well here. You have a nice thumbnail of Cathie Wood pointing the finger at the Binance logo. And she is blaming not just Binance, but CZ to a certain extent as well. And again, the headline here is that Cathie Wood blames Binance for the 1010 crash. She's certainly not the only one, though. Plenty of people have come out recently blaming Binance, blaming CZ. Some people called it a software glitch. OKX CEO recently came out and blamed Binance for the entire liquidation event. We're talking about $28 billion. So frustrating to see that we're sort of so exposed and so much at the mercy of centralized actors in the industry still.
Yeah, and I mean, of course, CZ came out and said that this is a coordinated attack against him and Binance. Everybody is looking for a scapegoat when it comes down to it, right? We're down, there's probably numerous reasons why, but I would imagine that, a little bit of it does have to do with the way that Binance handled that 1010 dip. But I mean, the current CEO Tang he's kept quiet while it's been mainly CZ that has been out there. So it kind of makes sense. CZ's catching all the flack right now. Why would the current CEO get involved and like paint a target on his back as well, right?
I think it's a clever strategy on their part. Everyone's already pointing their fingers at one guy. I guess Richard Teng can sort of quietly run things in the background, and he doesn't need to get attacked on CT as much as CZ does almost daily at this point. Now they did issue refunds. I want to say a couple $100 million potentially were
Yeah.
given to victims, if you want to call them that, retail traders. So there is that, but I have a feeling there's going to be a lot more fallout from this October 10 deleveraging. And again, $28 billion is a huge amount. It seems like there's going to be some fallout going forward. And just to sort of zoom out and again, give the bigger picture here, October 6th, I was doing my research this morning. The crypto market cap was at $4.3 trillion. You'll be surprised to hear that today it is at $2.3 trillion. That's a market cap loss of over $2 trillion, right? 47% of the entirety of crypto market cap wiped out since October 6th. So I think people like Kathy Wood, who have a huge amount of exposure to crypto, and obviously they care about the industry to some extent, but they're also financially exposed. They have reason to find a scapegoat and say, this is the reason, and hopefully that sort of plugs the outflow of assets that we've been seeing in recent weeks as well. But let's move over. That's too doom and gloom. Let's sort of try and move on from October 10 as much as we can. Over into Solana land. There's some interesting fundraiser announcements. I will share my tab here as well. This was good news. I like this. So Jupiter announced $35 million strategic investment into Jupe from Parafy Capital. TB, if you don't mind, I'm going to let you do the honors on this one. Talk me through what happened to Cat Lumper here with regards to this with this reveal. And I think in Jupiter fashion, there's a lot more going on behind the scenes here.
Yeah, 100%. So they had a massive event, their Catline Per event, and Jupiter Exchange confirmed that it secured a $35 million strategic investment into the Jupe token from Parafy Capital. So they bought the token, right? Which there's been a lot of controversy surrounding the token because it has been, going down a lot while Jupiter has been expanding a ton, right? The transaction that they actually did, it closed at spot price and it settled entirely in their stablecoin Jupe USD. And yeah, I mean, Parafy has agreed to an extended token lockup. So like they're putting a lot of trust in this. They're voting with their dollars here, and they're signaling a long-term commitment rather than just a short-term trade here. So I think that's important, right?
I mean, listen, emptying a $35 million clip at market prices
Yeah.
that's definitely a sign of confidence. That says you're in it for the long run. You're definitely not swing trading at that point. But I sort of scrolled a little bit too far, and I might have leaked some information here. But in classic Jupiter fashion, they've announced plenty more than just a $35 million purchase, right?
Yeah. I mean, one thing about the Jupe team is that they ship, right?
They
So
ship.
they have a lot more going on. They integrated Polymarket and announced this during the event, and they might, this might kind of come as a response to Kalshi integrating tokenized contracts on Solana. So, recently both of the biggest prediction markets are competing for Solana market share, which is something that we love to see. So
Definitely. We'll be covering prediction markets increasingly, I suspect, as we get closer to
yeah.
clarity, finally, some clarity around the Clarity Act, hopefully sooner rather than later, given that the midterms are approaching sooner than we'd like them to. And this is something that I'm going to bring up with Thomas Cohen shortly as well. The doomsday scenario that Matt Hogan gave us last Thursday was that if it all really hits the fan, so to speak, clarity never happens. Someone like Elizabeth Warren maybe takes charge of the SEC after the Dems win the primaries, and a lot of the pro-crypto changes that have been implemented over the last sort of 6 to 12 months will slowly be unraveled, and that would obviously be an extremely net negative outcome for the crypto industry. So curious to see if Thomas Cohen shares that sort of doomsday scenario. But let's move over to Zenrock. The next story, this one is written by Finn as well. This is privacy related. Interesting update from Solana Land. I like this semi-revival energy that we're getting from the privacy meta at the moment. Obviously, with Zcash things went parabolic, everyone was constantly talking about privacy. And then I think the UAE government turned around and said you can no longer talk about privacy. And didn't go down too well in Solana land. So Zenrock launched Hush Protocol as Solana privacy sector gains momentum once again, is the headline from our senior journalist, Finn. And he also writes, Hush Protocol brings a yield-bearing privacy layer to Solana DeFi. Zenrock launches Zcash-inspired privacy protocol, which is touted as, again, a Zcash-inspired privacy layer, but this time on Solana specifically. And it's going to enable DeFi users to shield their on-chain transaction from prying eyes. I like this. What do we think?
Yeah. I like the idea of privacy, right? It really took off, and I mean, it showed in the price of Zcash, but I think it showed like the importance of privacy, transacting privately, and I think a lot of people really caught on to that narrative, And I like to see this coming to Solana. So, and to get into Zenrock a little bit more, they said that Hush protocol, it's more than just a simple mixer, right? So it's actually a shielded compute layer where it could theoretically power any Solana app in a virtual machine. So the privacy layer is heating up again, and it's kind of following the rise and fall of Zcash in the recent months.
Yeah, I mean, we are undoubtedly going to be paying attention to privacy, least of all if that doomsday scenario that Matt Hogan shared plays out. I think people are going to be forced to think about privacy more seriously. But you'll remember, SolanaFloor listeners, that we were covering the Umbra TGE a while ago. That was a very successful TGE. Archeum is obviously a pioneer when it comes to on-chain privacy as well. I've heard through the grapevine that they have some very interesting announcements coming. So we'll be paying attention to privacy. We just mentioned earlier Polymarket and Kalshi as well. Prediction markets is another thing that we'll be paying attention to. Jupiter, I'm sure those guys are going to keep shipping and shipping and shipping as they always do. And going all the way back to the first article, of course, the 1010 crash, which has inspired a lot of people to sort of point their fingers at centralized exchanges once again. I think the extent to which that guilt can be attributed to a single venue, a single centralized entity, will be becoming increasingly clear in the coming weeks. Hopefully, once we bottom, sentiment sort of starts to improve with it, and we can stop playing the blame game and start fixing things. I suspect that will be very soon. And if you listen to all these sort of TradFi investors, regardless of how many millions, hundreds of millions, or even billions, as is the case of Tom Lee and Michael Saylor, they might be down in their P&Ls. They keep saying that the bottom is near. They keep saying that the fundamentals are stronger than ever, and the price will eventually stop lagging and it will catch up to the fundamentals, and that this is sort of an inevitability, and that this is the reason why we all got into the industry. So I'm leaning towards that thesis playing out in the long run. Curious to see how that happens. Now, Thomas, you also slipped in a couple of fairly wild honorable mentions here. Should we go through them?
Yeah, I think we have to, right? This week, we did see Kyle Samani. He announced that he's stepping down from multi-coin, but actually increasing his forward industries exposure and therefore Solana exposure. So, he is still mega bullish on Solana. And, I've seen a lot of like takes on crypto Twitter for both ways saying, he's exiting. This is what VCs do.
He's
But
not exiting.
if you look at their history, they were some of the biggest Solana bulls when Solana was at its lowest. And I always heard from teams that they were willing to work with them and extremely supportive, especially during the bottom, which really counts, right? So they, him and the whole team, they did a lot for Solana. What the real reason is for him stepping down, I'm not really sure. I don't think we'll ever really hear, but he's done a lot for the whole ecosystem, right?
He certainly has. I mean, he's been shilling Solana since Solana was shillable. I was talking to a few of the team members the other day, doing research. I found a video of Kyle Samani talking about how this is the most revolutionary industry he could possibly have dreamt of working in. And this was, I want to say 2018, 2019, something. So going all the way back then, he was a mega bull, and he's still an absolute mega bull, but now he's just extremely long soul. And we love to see that he's directly and indirectly increasing his exposure to Sol as well. So, yeah, good. I think it's a good choice to slip that into the honorable mentions this week. And there is also a dishonorable mention. Caught some flack on X. It is one of the most prominent figures in the industry. I guess doing a 180 is a fairly appropriate description, right? We're talking about Vitalik, of course. What's going on, Thomas?
Yeah. So, I mean, you speak about Kyle Samani and, what he's done for Solana. One of the things that he's argued, for Solana so much is like the monolithic versus like the L1, L2, L3. Like you go back years and he's been arguing with Vitalik on this. And actually, the whole Solana community has kind of been validated based on this, right? So,
Yep.
Vitalik has officially ditched L2s. So, I mean, he said that there's no point for them. And, we've been saying this for a really long time. And it really does validate the Solana monolith thesis, right? It is, worth mentioning why we're only putting this in the dishonorable section because, it's we told you so. No shade to Vitalik or the Ethereum ecosystem, right? This was their way of scaling. And it was,
Absolutely. Yeah.
and, of course, they promoted it. They promoted these L2s. They were all supposed to be part of the Ethereum ecosystem. And now for him to kind of turn his back on them, it puts those teams in very like a crazy spot. Like, what do you do if you're an L2 at this point?
Yeah, I wouldn't want to be leading a roll up team for sure. Definitely shout out to Vitalik. He's done absolutely amazing things for the industry. By the
Yeah.
way, I just want to reiterate what Thomas Bahamas was saying there. It is an "I told you so." It is an idea that was almost ubiquitously shared across the entire Solana ecosystem. That a monolithic chain would be, in the long run, uh, much more scalable than having uh, all of these roll-ups. You'll remember late 2024, early 2025 as well. We were discussing to what extent, if at all, Solana needed roll-ups. And we sort of reached the conclusion, I think, through various conversations with founders and builders and devs and ecosystem participants, that only in very specific niche cases do we need roll-ups. And in those niche specific cases, then they are very, very useful. But in the long run, there is one chain, and I think that's a reasonable take. Mert came out with so I guess in support of Vitalik, you could say, and his argument was let's not take this opportunity to promote crypto tribalism and dunk on Vitalik. It is a sign of a functioning mind. I'm paraphrasing here, but for somebody to sort of take into account what they're seeing out there and change their minds and change their position, particularly when you're as powerful and as influential as Vitalik, I think is commendable, right?
Yeah, and
There's
to kind
yeah,
of like go to that, like there actually are some use cases for like L2s or rollups on Solana that we're going to
absolutely.
see, right?
Yeah,
I think it's bulk trade with a sidecar. I think it's Zeta is coming out with Bullet, which is kind of like a rollup, and the reason for that is for perps, right? I think that that's been one of the things holding Solana back on perps has been, you know, that you can't quite get the execution that you need for some of those trades. And we're going to see those relatively soon, is what we keep hearing. So, in specific instances, maybe an L2 is what you need. I don't know.
that's an interesting one. Now, the more we talk about stablecoins, the more we talk about tokenization, uh, we run the risk of forgetting that Solana is, I guess, being challenged in some sense by Hyperliquid's dominance of the perp space, right? I know you're very interested in this. We cover it from time to time on the video channel, and Finn, of course, loves covering everything from prop AMMs all the way to perps exchanges. So, I guess what's your big picture take? Is Solana in a position to have its own Hyperliquid-esque um, offering in the near future, or because of some of these limitations that necessitate roll-ups in niche cases, are we maybe not quite there yet?
Okay, I think we're 100% going to be able to compete, right? I think the problem has been, the execution wasn't there. I think that with Alpenglow alone, we should be able to see, comparable execution or better just on the Solana main, like on mainnet, not on, any roll up or L2 or anything. But I think what we've seen now is we've kind of seen Solana take over spot volume for any asset, right? Solana is the everything marketplace for spot assets. Well, Hyperliquid has taken the perps. So I mean, if you look at the volume of perps on Hyperliquid, it's massive, right? So I
Yeah,
think that that's proven, Solana needs to go after that. So we need those protocols to get up to speed and to start going after them. And I mean, I think it's going to be one of those cases where we're starting at a disadvantage and we're gonna get there. The Solana's always been like the usable chain where people come to use it. Right now, for a lot of these assets, it's in the spot market where
definitely.
I think that the perps market is massive and we're gonna take share from it. It just might not be right away.
Yeah, you got me thinking there. So one of the theses, I guess, an observation rather, that came out recently is, look, we're looking at a sea of red. Everything is down. Whatever chart you open, it's red, red, red. But then, sort of on the tail end of the I guess crypto native assets, you could call them, you've got hype and pump that are somehow outperforming most assets. And I think that sort of speaks to your idea here of it's got to get used, right? If it's not being used, if there's no demand, if there's no real adoption, then there's going to be more sellers quite likely than there are buyers, and the price is naturally going to go down. What do we think? Are we? I'm gonna try and quote a Kyle Samani argument from a while ago, just because you mentioned him. I want to say it was about a year and a half ago. He said, "I am intellectually short Bitcoin, but I am financially long Bitcoin." I think this is this is one of my favorite ways of swerving a question. So, are we both intellectually and financially long hype and pump?
Yeah, I mean, there's so much to that, right? I think that hype has really caught on, right? And you see they just brought on tokenized stocks, they just brought on tokenized metals, and the
Yep.
volume in those markets is insane. You know, we're talking tens of billions of dollars in those markets, right? So they're not only executing, but they're proving that this is something worth going after, right? We're seeing protocols on Solana start to integrate those. So we're seeing like the direction is there on Solana. We just need to start taking some of that market share. Pump, I don't know, right? You know, they bought a lot of the token back. You know, it is the one of the most used protocols on Solana. They basically started a whole meme coin meta. But how sustainable is that? How sustainable are the buybacks going to be? You know, you look at I always look at Pump Fun and I think of just like a fantastic business that people aren't looking under the hood at, right? Like what are they making all that revenue on? People pumping and dumping coins. You know, like how sustainable is that going to be in the long term? I don't know. But how successful has Pump Fun been? Incredibly successful. You know, like
Undeniably so.
you can't deny that, right?
Undeniably successful. And another one of these stories that we covered maybe 6 to 8 months ago, when it all came out, was that Pump Fund was being accused of having extracted $700 million plus from the Solana ecosystem, and this was a very divisive topic. People were basically saying, "Hey, look, no, it's all fair game. You launch a product, you launch a service, people use it, you generate fees. You know, it's business as usual. We shouldn't necessarily call that an extraction." And I think they were quite quiet for about 3 to 4 months. Plans weren't necessarily announced very publicly as to what they would do with that $700 million. And until it turned out that they were going to do some serious innovation, they were going to challenge the streaming giants of the world. They were going to announce later on buybacks, of course, token buybacks, which are now quite popular. It seemed like Pump Fund was sort of the enemy for a while, right? But no, it's
100%.
$700 million. So we're talking about investing it back into the ecosystem, and where that money's going to come from. I don't think they're running out of money anytime soon.
No, and you know, all right. So what this takes me to is, all right, we're on the bigger picture. This is the big picture. I keep saying the bigger picture. That's wrong. It's the big
Make it
picture.
bigger.
Make it bigger. But you know, when we look at it, some of the biggest narratives are tokenization on Solana, like bringing all assets onto Solana. But the other one is like, well, we've had so much success in meme coins, and it is so profitable. Is it going to go away? You know, like where is the future there? Were meme coins and NFTs the test net to bring on real assets, or are they going to be part of internet culture, part of anybody that's in crypto? You know, I don't see them going away. What's your take there?
I don't think these things are going to go away. As far as the proof of concept argument goes, yes,
Yeah.
I do believe that the entirety of global finance, for example, coming on chain, has to be preceded by it being tested. You're not going to take trillions of dollars of assets and put them on an entirely new system of rails and ledgers unless a bunch of people have really pushed the network to its boundaries. And Solana is a great example of that happening
Yeah.
with meme coins. I mean, I think it was around the Trump launch. So the Trump meme coin launch would have been December 2024, right? We saw insane amounts of volume, and people turn around after that and said, look, institutional adoption can now proceed. It can accelerate because we've tested the network and we have all of these sort of secondary adjacent challenges that are being resolved to a certain extent by these roll-ups. Raiku's an example. They've got ahead of time blocks. You've got, Jito, BAM, all of these innovations, Alpenglow you mentioned. So yeah, I don't think they're going anywhere,
Yeah.
but they won't be anywhere nearly as prominent as they once were. On the NFT side, so that's the meme coin side of the argument. On the NFT side, I think Raoul Pal makes a very compelling argument. He says, look, at the end of the day, everyone is going to want exposure to some very long tail assets in any environment that they can get their hands on these long tail assets, assuming there is demand. That demand will eventually be serviced. So think, art, think jewelry, think super expensive whiskey, think wine from 100 years ago, whatever it may be.
Yeah.
The most niche assets will be tokenized and they'll be tradable, and some of that'll be art, right? So NFTs will sort of live on in that sense. And it seems the conversation with Thomas Cohen was going to sort of veer off into one of these long tail asset tokenized discussions. I had some notes from a conversation he had, I want to say maybe 3-4 months ago, where he was talking about a tokenized 300-year-old violin. Now,
Yeah.
if Galaxy is talking about 300-year-old tokenized violins, then surely there is appetite for long tail assets coming on chain. And hopefully that remains to be the case.
Yeah. Yeah, I really like Raoul Paul's NFT, digital art. I like all that. I really want that to be true, but I don't see NFTs coming back in the way that they were. You're talking about longer tail assets, you're talking about different things coming on chain like that. I see that happening. Um, but also, NFTs, meme coins, these really do well when there is a ton of liquidity, right? We really saw them take off. Solana went from $20 to $260, and then NFTs took off because everybody made a ton of money and they didn't know what to do with it. So what they did, trade NFTs, they traded meme coins. So when there's a ton of extra liquidity and people are up money in the system, that is when you see those assets really take off. And we're not seeing that now, right? I bought an NFT a couple weeks ago, and it was the first time that I've even considered doing that in a very long time. Yeah, I don't know.
Definitely not going anywhere as far as the technology goes. We are going to be joined, it seems, by Thomas Cohen shortly, following some technical difficulties. I just want to invite everyone that's listening to this conversation, if you have any strong opinions about tokenization, about stablecoins, about RWAs, about any of the following, then drop them in the comments. This is the guy that's going to be able to answer your questions. And you have a direct line of access to somebody that's head of tokenization at Galaxy, one of the biggest firms in the industry. And we're going to sort of reiterate how impressive his resume so far has been and is, and I'm sure it'll continue to grow as well. He works, of course, alongside Mike Novogratz and some other DeFi OGs. Head of DeFi at Galaxy is someone that we've spoken to a lot on this channel. Michael Marcantonio, our colleague Finn, has had the pleasure of interviewing multiple times. One of the most fiery individuals, Michael Marcantonio, when it comes to talking about DeFi in this sort of bullish light. And we get similar vibes from Thomas Cohen when it comes to tokenization, the future of tokenization, which, by the way, he calls a revolution. He thinks the revolution will be tokenized, to quote him. And I'm curious to pick his brain, and I'm sure you have some questions as well. Some people were asking the other day if tokenization is one of those things that's basically going to save the industry. I'm not so sure, given that it's been around as an idea since maybe 2011, right? And every cycle we talk about tokenization. Every cycle there's a series of conferences that's focused on real world assets coming on chain. And until 2025, I want to say, at least within the Solana ecosystem, these are all lofty ideas and goals and dreams and the one day maybes of the world. And now we're looking at trillion-dollar asset managers like State Street coming on chain through the help of Galaxy. And of course, Thomas Cohen is leading that charge. So really just excited to chat to him, really, and see how he sees not just the world and all these macro headwinds that we've been talking about today, but how all of that impacts necessarily his division within Galaxy when it comes to tokenizing up to $5 trillion of State Street's assets. What do you think, Thomas? Maybe I'm too excited. Should I not be too excited? Is it another nothing burger year?
No, this is a lot of excitement. It's needed. So they're doing a lot. They're at the forefront of the conversation. So I'm incredibly excited to hear more about it.
They certainly are. And ladies and gentlemen, we are joined by Thomas Cohen, who once again is the head of tokenization at Galaxy. Now, you'll be pleased to hear that his team sits within the investment banking decision, but they're building the industry's first fully on-chain internet capital markets business within a bank. Now, before Galaxy, and this is where it gets really, really interesting and quite impressive as well, I might add. Thomas worked at Paxos, at Ripple, then the Boston Fed CBDC team. He's got an engineering degree from MIT and an MBA plus MPP degree from Harvard. I don't think you can get more impressive than that. Thomas Cohen, ladies and gentlemen, is joining us. Welcome back to SolanaFloor, Thomas. How are you?
I'm good. How about yourself? Sorry for the tech delay, but glad to be on and good to see you guys again.
Glad to have you on. No worries about the technical delay. It happens to the best of us. I'm just happy we get to catch up and pick your brain on all things tokenization and get the bigger picture as far as your perspective goes. We spoke in Abu Dhabi December during our Breakpoint live stream there. Price action since then has been confusing to say the least. Sentiment, as we know, is at all-time lows, but the fundamentals seem to be fairly solid, not changed much at all since December, I would argue. And so just taking a step back and thinking about tokenization, surely this is a pivotal moment to have this conversation because we did some digging, by the way. Your path into crypto is, again, one of the more unusual ones that we've come across. But I want to ask you, before we get to tokenization, what happened in your life that made you go from engineering at MIT into the world of money? Was it an accident? Was it an intentional decision? And there's this meme in crypto of when prices are down and you go home for Thanksgiving. It's always a difficult conversation. So how was last Thanksgiving for you?
Yeah, believe it or not, it wasn't an accident. It was actually on purpose. Funnily enough, I wrote my undergrad thesis on the Swift interbank network and VisaNet. And so very much saw those networks and saw how they really transformed the way we move and store value in the past 50 years. And then I fell down the crypto rabbit hole and saw this technology, it can be used for a lot of things, but the most applicable today is really just to move and store fiat currency more efficiently. And that's why we've seen such strong product market fit with stablecoins specifically, because it is simply, just the internet of value, as many people call it. One thing that we're really excited about here is, I think in previous cycles, a lot of the tokenization focus has been kind of in parallel with the price of Bitcoin and other crypto native assets. And this cycle, we've seen almost a complete decoupling, meaning that, as we've seen recent price action where Bitcoin, has gone down a bit, we have seen, an increase and an acceleration in tokenization. And Galaxy, of course, because we have the DNA of TradFi, but the expertise of crypto, it means that we're really well positioned to help a lot of these traditional financial institutions begin to make this transition into tokenization to really see what this technology can do to help them upgrade the back end of the financial system.
Yeah, we love to hear that. It's a very interesting take. And from your background, I mean, MIT, Harvard, and you were doing your undergrad thesis on Swift. I mean, that seems just like a fantastic trajectory.
Well, thank you. What it means is I'm just a nerd in one little tiny niche of the world, which is just moving and storing value. And one thing that's clear and what I'm excited about is, if you look through the different networks that we've created, even in the past 50 or 60 years, like there are multiple ways, dozens of ways for me to be able to send money to either of you, right? Whether that be Zelle, Venmo, FedWire, whatever it is. And I think in this space, people really should look at it as just another avenue through which to move value. I don't see it completely, upending a lot of these other ways to move value. Instead, it's more of like an upgrade and more of a parallel way to just show that it's better, faster, cheaper. We no longer need to use checks, but still in the US, we use checks. Many people still do. That's still a part of the market, and that still serves that market demographic. So I see this as, stablecoins as just another way to move and store value, and that's really what we're excited about. And one thing that's clear is, while crypto moves really, really slowly, the payments infrastructure and the financial system moves comparatively a little bit more slowly. And so the question really is how quickly we can make these two worlds come together in the most efficient way, while also making sure that it's done in a safe manner and adherent to the new regulatory regime that we're really entering.
Absolutely. Now, just very, very quickly, in the interest of time, I want to zoom in on where we are in the cycle. You mentioned price there for a second. It's very, very confusing out there for most people. There's the conflicting information and then an abundance of information as well. Mike Novogratz, who I guess is your boss directly, indirectly, recently said crypto prices are not quite doing what they're supposed to. The prices weren't supposed to act like this. and he said something went wrong, but I think we are getting close to a bottom, but we'll see. I'm curious from your, I guess, personal perspective, is that thesis of something went wrong, but we're nearing a bottom, is that shared across Galaxy? Is that shared across the partners that you work with as head of tokenization?
So what I will say is predictions are always impossible to make, especially with crypto. And so, if I knew, I really wish I did. One thing I will say is for tokenization specifically, we see three key trends that means that we do think tokenization and adoption are up and to the right. That first one is technological maturity. Specifically, Solana is a good example where blockchains now versus previous cycles are just better, faster, cheaper, and really are able to support what the financial system needs in terms of the resilience that is needed for a system. So that first one, tech maturity. That second one is regulatory clarity, given the Genius Act, as well as the Clarity Act that's continuing to move through the halls of Congress as we speak. And then finally, the product market fit that TradFi is really seeing here with stablecoins, money market funds, and tokenized equities as well. And so for those three reasons, we really see you can almost put the price aside and just see that those trends are going only in one direction, and that's up and to the right. And we're excited as Galaxy to help make this transition happen for different parts of the financial industry.
Right. So those are great trends. The big picture, right? So I'm gonna give you some different trends, and let's see if they sort of stack up nicely, or if they have maybe conflicting metrics that are being followed here, or conflicting outlooks. Macro is something that increasingly impacts us, whether we like it or not. So I guess this is a bit of a reality check question for us as well. January, not too long ago, feels like very, very long ago, but we had new tariff risks. The US shutdown risk again sort of reemerged. You've got Hormuz tensions, right? The US is moving military assets back into the Gulf. You've got capital rushing into gold, but we're also seeing $10 trillion market cap fluctuations. I mean, in my mind, these are classic stress signals of the market saying, look, we're sort of facing uncertainty, we're panicking. And does that mean that tokenization accelerates as far as this adoption goes because people want safer, faster settlement, as you mentioned, those three pillars, those three trends? Or does it actually stall temporarily, right? Do these macro trends impact those adoption trends that you were talking about? Which one of those two are we seeing in the room right now?
Yeah, I think it's a good question because you could very much argue both sides of that, right? Where people might be focused on other uses of technologies and other macro trends that are frankly just distracting and can mean that people are focused on other things other than this technology and what it has the potential to do. The other side of it is this can solve a real problem. And as uncertainties increase across our economy and geopolitically around the world, this technology can make it better, faster, cheaper to move and store value. And that's something, whatever happens in different parts of the world, people are always going to want to move and store value in the most efficient and effective way they can. And blockchain is the foundation for what that potential can really have. And the question is, how quickly institutions, big and small, are able to make this adoption and move forward. I personally am of the opinion that it will follow an S curve similar to other technological maturities, and that we're quite close. And with the Clarity Act and others, I think that'll really, help accelerate things, and it's just less cyclical, which is a wonderful thing to see compared to previous cycles. And so we're really excited. It's still quite early, but for those of us who've been in this space for a long time, it doesn't feel like we're early. But then you go to some TradFi conferences or you talk to others, and we realize that we do have a long way to go.
Yeah, and speaking of adoption, right? So you guys really led the way with your own stock, right? You tokenized Galaxy stock. And to get like a little bit technical, Superstate is kind of acting as the SEC registered transfer agent. So when a token moves between wallets, the actual shareholder register updates in real time on chain. Do you want to walk us through the mechanics of that and kind of let us know a little bit of like what the infrastructure looks like when you guys are tokenizing these stocks?
Yeah, totally. So, full disclosure, Superstate is one of our portfolio companies. We know, Leshner and the team quite well, and they've been wonderful people to work with. One thing that we really found was because of Galaxy's unique position as a crypto-focused bank, it means that we understand the traditional world of stocks well, and the up to like 10 intermediaries that happen when you go to buy Google stock. But we also know crypto and blockchain really well. So in many ways, we are really well positioned to be able to find that blended world where you can use the technology to to allow people to better access and move equities specifically. And so from our perspective, we really stepped back and said, okay, what do we think is the end game here in terms of what the technology can do and what's best, not just for Galaxy and our shareholders, but more importantly for the market more broadly, for investors and for regulators. And the structure that we came together to work with Superstate on really, we think, hit the nail on the head. And that's the main innovation there is the fact that we don't have a wrapper. There's no SPV. The underlying token is the Galaxy Class A common stock that I have in my Phantom wallet on my phone, for example. And so what that means, to your point, is if you're also whitelisted by Superstate, I can send you my stock. And there's no mirror shared register off chain that they're referencing and updating. That movement is real time, and that blockchain is the source of truth for them. And so while it seems pretty niche and only important to us nerds who spend far too long in this little niche part of it, it really is transformative for what it means. And this is truly the second inning of this whole process. But what was important to us is demonstrating to the market, to regulators, and to investors that, hey, this is what we think makes the most sense when things scale in the longer term, and we want to make sure that our narrative and our vision is the one that we can help reach broader adoption beyond just our stock.
Yeah, 100%, and that is huge. So it's an actual stock directly held in your Phantom wallet that you can transfer out to other whitelisted addresses. So and this is direct on Solana. Do you want to talk a little bit about the decision for choosing Solana for doing this on? Did you guys look at other blockchains? Are there other blockchains that you guys are using, or want to talk a little bit about that?
Totally. So as you know, Galaxy in our role, we're chain agnostic, and we work with many different chains and multiple different clients, depending on what makes the most sense. Whether you want something really, really fast or something really, really resilient, or where most of the dev talent is. It's a menu that you can really choose from. And so we found that Solana was a really good fit for this for many reasons, but one that really stuck out to us was their focus on internet capital markets, as they call it. It felt like it really fit well, and also just the underlying technology. They've really shown that they have a very strong team that's able to continue to make sure that their chain is super impressive and very resilient and really fast. And so we're still early in terms of what this looks like long term, but we wanted to make sure that for that decision, it made the most sense to start with Solana.
Yeah, 100%. And with where it's at right now, you do have to be whitelisted to actually send that stock from one to the other. Do you envision this as being something that we could integrate with DeFi protocols and have a lot more uses down the line? And this is the first step, or what does that look like?
Yeah, so it's so funny. In many ways, this technology is absolutely transformative.
Yeah.
In other ways, the fundamentals that are required for investor protection, for issuer protection, and to make sure that our capital markets are as efficient and effective as possible in the US, that doesn't change. And so it's a balance between innovating ahead with the technology and making sure that it still adheres to the regulations that have made US capital markets the most impressive from globally all over the world. And so this is a perfect example where we're working with regulators and others to make sure that as we move forward and ideally are able to move to have our stock more widely available throughout different crypto platforms, that we do so in a compliant manner. And to your point, doing so through whitelisting and doing so through permission systems is definitely a step that is almost certainly the way to go. We just want to make sure that we cross all the T's and dot all the I's before we make the jump, but we very much expect to do so when it makes sense.
Yeah, and one of the big topics in Solana these days is like, how does a token accrue value? A lot of the tokens that are launched, there is, they'll do buybacks for every now and then. Some of them are just basically meme coins that some of the top protocols kind of launched. But what's going to really help them out is like, all right, can you actually launch a security on chain? And I think that what you guys are doing has the potential to like fully transform what a token on Solana actually means.
Yeah, and I think one thing that I'm excited about with this cycle, because so much of it is just education of TradFi, of what this technology is. People think of tokens and they think of securities as total separate things. At the end of the day, a token is just a packet that really allows you to represent and be, many different uses, whether that be, a tranche of debt, whether that be an equity, in this case, Galaxy stock. There's so many different use cases. The first thing we tokenized years ago was a violin, and that was, again, a token that represented the violin. So the takeaway here is I make the parallel to the internet packet, where once we standardized the way that you move and store information globally, that's when the internet really took off, when you had a standard structure. Same thing here. Once we have the token standards that make sense and the blockchains that make sense for most people to aggregate and come onto, it's going to be the same explosion of value. The question is when and how we do so to balance innovation with also the regulatory clarity that we're all seeking in the industry.
Thomas, I'm slightly annoyed here. I was going to ask you about that violin, but you front ran me. I'm slightly frustrated. But we did our research, and I found it fascinating that you guys, tokenized a 300-year-old violin. I find that quite fascinating as far as long tail assets go. And we were discussing with Thomas Bahamas just before you came on as well, how there will always arguably be desire and demand for these long tail assets. As long as the technology exists, as long as the demand exists, that demand will somehow be serviced on chain. But it also made me remember, I guess, one of my favorite interviews that I've ever done. It was at a tokenization / RWA focused summit somewhere in the US. And the guest that we had on, she said something fascinating. She said, listen, if you take a pile of shit and you put it on chain, it's still a pile of shit. You're not really adding much value by tokenizing it. And I thought that it really took me aback. And I thought, wow, someone who's put so much of their time, energy, effort, and money into tokenizing assets has such a harsh reduction of the reality of it as well. So I'm curious how you think about what a valuable asset is that should be brought on chain. Again, the example of a 300-year-old violin. Clearly, there's a very, very small number of people in the world that care about 300-year-old violins, let alone a tokenized on-chain version of that. So how do you think about the value of these assets and bringing them on chain? And what does that process look like to you?
Yeah, it's always fun to talk about what is value, especially to a crypto crowd, because I feel like we could talk all afternoon about it. But one thing that, to your point, if it's not valuable off chain, it's likely not valuable on chain. But to me, the story of a violin and assets like that I really, really find attractive are the fact that, if you're very, very wealthy in this economy, you can contact banks and get loans against your different assets, such as a violin. But for the rest of us, it's much more challenging, simply because the cost to do so doesn't really make sense if the asset's a little bit lower. But the thing about tokenization is that fixed cost is so much lower that long term, if you push this to the extreme, there's no reason why people shouldn't be able to get real-time loans against their iPhones or against their cars, simply because it's a valuable asset. And getting a 50% LTV against that in real time, the back end structure for that, if it's all tokenized, can be really efficient. So the cost to do so is quite low. And of course, because it's transparent, the auditability and the tracking is also there as well. And then, of course, you can use DeFi for funding all of that. So in many ways, while we started with the violin, we see it accelerating all the way down to lower on the value curve. And that's similar to the way we've seen multiple, technological maturities happen over time. Uber is a good example. It started with Uber Black and then it went all the way down to Uber X. Same thing here. And so, we started with the violin, but I think long term, we're excited to see many more assets end up on chain and really see what that does from a availability perspective.
Certainly an exciting future, and I guess another one of the quite interesting things that you've said about tokenization in recent times is you said that the revolution will be tokenized. I love that, but sort of diving into it, what does that mean in, let's say, 5 to 10 years? Are we going to get to a point where we don't even need to mention that assets are tokenized because everything is simply tokenized on the back end? And what does that world actually look like? I mean, if I go home for Thanksgiving, for example, are my parents going to be, and their entire generation, are they inevitably interacting with assets on chain, with crypto rails, without even knowing? Is that the reality that we're moving towards?
Yeah, that's the hope. And I mean, right now, we happen to be focused on a lot of different structured debt products. What I'm excited is 5, 10 years from now, we'll just be talking about debt again. It just happens that the back end is built on rails that are better, faster, cheaper. And we're actually already seeing that with stablecoins, where some remittance companies and payment companies aren't even mentioning that they're using blockchains on the back end. It just happens that they're like, oh wow, we can lower our cost basis by 80%. Turns out no one really cares that they're using blockchain. They just care that now they're paying, 80% less to send money home. So that's really where we are in the adoption. We're going from the coolness of the technology to what this technology can actually do. And once we're there, then we see the adoption and we see the interest, and the tech just falls to the back end. Similar to the way that encryption unlocked much of the internet, but no one thinks about encryption now. It just allows me to be on this video call with you guys in a very efficient way, and it really enables so much. And tokenization is exactly the same thing, just for value.
Clear. So again, thinking about the not so distant future, hopefully not so distant, the dollar dominance and the declining dollar dominance is one of these sort of narratives that's emerged. Quite a few high prominent figures have said, no, it's not a problem. Quite the opposite, actually. It allows the US to sort of assert dominance through various mechanisms that exist with stablecoins. But if we think about this stablecoin versus the US dollar discussion, I guess, dichotomy for a second, are we moving towards then a world where stablecoins become de facto preferred global sort of dollar rail, even if Washington doesn't explicitly endorse that? And I'm sort of thinking about the milestones that we're looking towards now with clarity and potentially the midterms threatening this. Or would you kind of say, no, that thesis is a little bit more overstated, and then, once regulation tightens, then we'll see how it plays out. How do you view that playing out generally?
Yeah, so I'm very much looking forward to the time when stablecoins are looked at in parity with all the other versions of the dollar. And what I mean by that is, if I have a dollar in my wallet today, or I have a money market fund, or I have a dollar in my PayPal account, or a dollar in my bank account, to us, we just think of a dollar as being a dollar. At the end of the day, though, those all have very different risk profiles, and some are lent out, some are fully backed. It very much depends. Cash is a direct liability of the central bank, whereas bank deposits are just that. They're liabilities of the bank. They're not actually fully backed by one-to-one by the Federal Reserve. And so what that means in practice is stablecoins in the long run should just be another representation of the dollar on chain. Just happens that they move on a faster, better, cheaper network compared to the other versions of the dollar, but a dollar should be a dollar. So that's kind of how I see them trading in parity in the longer term. To your question about dollar dominance and the role of the dollar globally, it's so funny. I feel like people have had this discussion for decades at this point, especially after World War II, where people have thought over and over that this was the end of the dollar, and over the dollar has shown resilience. And what it comes down to, put the technology aside, it's just trust and relativity, and what assets can be more competitive. Today, the dollar is still very, very competitive and used as the most efficient way to store and move value. And I personally don't see that changing. But of course, everything changes, and making predictions is always a challenge.
Yeah, that's extremely well said. Now, to kind of look at tokenization as a whole away from just the dollar, there was a book that was really big in ETH land a little while back called Radical Markets. I'm not sure if you've read this one,
No.
but it was a really interesting concept, right? So it's a world where everything's for sale, markets are redesigned from the ground up. Tokenization feels like it could be the infrastructure for something like that. Every asset price, liquid, composable, globally accessible. Like, have you read that book, and do we get there?
I haven't read the book, but yeah, long term, I think we do get there. I think the sooner that the technology can demonstrate real use cases and real benefits to people, and to people who aren't just in our little crypto niche, the better. I also think the sooner that technology can be adopted and become back-end technology, the better, so that the average experience doesn't change that much, except that it's better, faster, cheaper for people who want to store and move value and invest value and monetize and digitize different parts of their lives.
Yeah. Okay, that makes sense. And now I've heard that you've talked a little bit about tokenizing real estate, and you said that was relatively far out. Is that still your stance? I mean, I guess that there's some fragmented property laws. And
Mhm.
isn't that where like the real democratization is? You know, if tokenization makes treasury trading more efficient for institutions, does the retail investor, you know, really care? Or what do you think there?
Yeah, I think I do think real estate will end up on chain along with, almost every other asset on the planet. The
Mhm.
biggest challenge is in the previous cycle, people thought that just tokenizing would immediately generate liquidity. It
Yeah.
turns out if you tokenize the Empire State Building, it's still the Empire State Building, and so you can't really fractionalize it into a bunch of small pieces. And so I also think that the comparative pain point is pretty limited. And what I mean by that is if you want access to um, fractional exposure to real estate investments, REITs provide that and allow you to be able to have a lot of that exposure. And so, while I think long term, absolutely we'll see real estate on chain. The question is how long, and because to your point about it being local, I think it might take a little bit longer, but we'll kind of see.
I want to jump in on this in the interest of time. I want to sort of ask you another spicy, if you will, big
Oh boy.
picture take of yours. So I live in the EU, another Europor here, asking questions about the US. But um, as you probably can tell by now, I'm not a huge fan of CBDCs. I would say it's safe to argue that most retail that has been in crypto for a long time also isn't.
Mhm.
And we sort of keep coming back to this idea of Europe is very much pushing CBDCs. The US isn't necessarily pushing it. So, from your personal perspective, do you think CBDCs are an inevitability as well? We're talking about the stablecoin landscape being inevitable. We're talking about all assets, whether they're long tail or not, coming on chain and that being inevitable. Where on that spectrum of inevitability versus maybe we don't really need this anymore, do you see CBDCs fitting in?
Yeah. So just to zoom out, I absolutely see currency on chain, no question. The question is how that's represented and what that looks like. Back to bank deposits will end up on chain, stablecoins already on chain, cash. The question is, will that end up on chain? From a wholesale perspective, wholesale CBDCs I think are more likely to be on chain, and that's simply because it's a more efficient settlement mechanism between commercial banks and a central bank. Retail CBDCs, I personally see less likely, especially in the U.S. That's only because when I worked at the Fed back in 2021 and 2022, we published a paper called Project Hamilton, and in that it really had three key takeaways when it came to retail CBDCs. The first was because of the demand and the use of the dollar, it's unlikely that a blockchain can actually support that speed that is needed, and so. Which makes sense. You'd need about a million and a half transactions per second, which sounds like a lot. And for context, Visa does about 8,000 transactions a second. It can support up to 60, but it averages around 6 to 8. And so that is just many orders of magnitude greater that you would need. And so the first thing is that's why of the 180 or so CBDC projects that central banks are engaging in all over the world, very few actually use blockchains. They'll use different data center technologies, but no one has actually used a blockchain. So that's the first one. The second one is because we're unlikely to directly face the central bank, from me as Thomas directly to the Fed, it means that it would likely be intermediated. So I would get access to and interact with a CBDC from a commercial bank, which again means that they would have to have my information. I would have to be banked, and it would be more of a KYC product. And then third, the timing to be able to have something like this happen would take 7 years at minimum after it's funded. And so from that perspective, I just think that the U.S. economy is going to see opportunities to move and store value more efficiently and come up with stablecoins and other products to be able to move dollars on chain more efficiently than a retail CBDC. And so I think the market, given regulatory clarity, will likely solve a lot of the problems. That being said, I've been wrong before, but that's kind of how I approach all things CBDC. But at the end of the day, a currency is a representation of the financial part of a country, as well as the fiscal sustainability and the politics of a specific country, and so there are a lot of different dynamics that go into a currency, and that's why it's so important and why politicians are so focused on ensuring the resiliency of their local currencies.
Absolutely. Now, in the interest of time, we do have to wrap up. Unfortunately, we had so many questions prepared for you about Project Hamilton, about your past in the Fed, about CBDCs. But for another conversation, I'm sure we'll be chatting with you very, very soon. Hopefully, catch up in the next few months and see where where tokenization is moving generally, how much progress has been made, if any, with the Clarity Act, and of course, as we get closer to those November midterms, whether or not we end up moving more towards a doomsday scenario, or if all the progress that has been made as far as crypto regulation can actually sort of materialize into something optimistic, and hopefully, as we mentioned earlier, price catches up a little bit with the fundamentals as well. Thomas, it's been a great conversation. I really appreciate you. Now, for anyone who's listening that wants to follow Thomas on X, the handle is Thomas Cohen 93, and for Galaxy, of course, I'm sure you already follow them. It is at Galaxy HQ. Ladies and gents, that was Thomas Cohen, head of tokenization at Galaxy Digital. Thomas, we appreciate you coming on.
Great to see you again.
Thanks, guys. Talk soon.
Chat soon.
All right.
Awesome. What a great chat. What a great guy. I wish we had more time with him. We go in with so much research. He front ran my violin question, which is a little bit frustrating, but I mean, great to see that he's thinking about these long tail assets being tokenized. I know you've done some digging into his past at the Fed and his projects around CBDCs. So a lot to unpack there. But great chat, no?
Yeah, fantastic to talk to him. You know, I think the CBDC conversation is very interesting because, you know, we use stablecoins and you can see what everybody's doing on chain fairly easily. So he didn't even mention surveillance, right? Like that was like that's like what the community doesn't want, right? Is government surveilling all of their money. And it's like, it's all public. It's all public on a blockchain. It's more about like the issuance and where that money actually comes from. So it's an interesting take. I didn't even think about it from that angle.
Well, listen, we're going to be covering privacy again. We mentioned it earlier, so I'm sure the next time he comes on, we'll sort of dig deeper into this privacy and CBDC and surveillance angle as well. We do have to wrap up, ladies and gentlemen. I want to thank you so much for joining us today. I really appreciate you being here. We are going to be listening to a Remora Market Spaces in the coming minutes. These guys have processed over $100 million in cumulative trading volume. We've been covering on-chain equities, on-chain metals, something that Thomas Bahamas has been looking very closely at. So we're going to head over to their weekly spaces to learn a bit more about the growing RWA sector within the Solana ecosystem. Super exciting announcements I hear coming from them as well. Thomas, thank you for joining me on this. I think it was a great conversation. We'll be back soon, and from then on, every Thursday at 11 a.m. ET. So I want to say GN to you all, and I'll see you next time.
Thanks, Jack. We'll see you guys all the next time.
Okay.